Hello everyone, it's Red with RedDragonLeo.com, and today is Wild Wednesday, October 27th. And it was a wild Wednesday today as the market sold off initially and then rallied back throughout the whole day to basically close almost flat, just slightly down, putting in a candle, a reversal candle, but with a bottoming tail. But understand that this is not valid unless it's at a bottom. So so that really doesn't mean anything, just means indecision again. Now this topping tail does mean that it's topping, it's in a topping process, but this bottoming tail is not bullish by any means, so don't be fooled by that. It's only bullish if it's down here at the bottom. That's pretty much it. That's why they call it a bottoming tail, because it's at the bottom and it puts in a tail. But anyway, pretty much the opposite happened of what I thought, which is never anything new, because calling this market isn't exactly something that's easy to do at any given time. But basically, on the video I did yesterday, I thought that the 60-minute chart right here on the MACD would roll up first, then get overbought in the early morning and roll over into the close. And I guess I just forgot that there wasn't any POMO money in there today. So instead of it running up first, it sold off some more, got even more oversold, and then finally rolled up into the close. As you can see, this is a 60-minute chart. It is rolling up to the close. I do expect it to come up tomorrow now in the morning, and we do have PMO money tomorrow, the last bit for the week. There won't be any on Friday. So that means that we're likely to run up here in the morning session in the first part of the midday and put in some lower towers here on the histogram bars and roll over towards the end of the day. That's what I expect to happen. So up here as well, we're going to look for this stochastics to run its way up here as high as it can get. Looks like there's a trend line here you can draw here. It might just bang on that trend line and roll over, or it might push on up here into the 80 area. It just depends, I guess, on how much money they put in there, and also how much or how good or bad the initial claims and continuing claims are tomorrow morning. If they really beat estimates quite a bit, that will be bearish on the market, because the market will fear that it's not going to get the quantitative easing that it's expecting, the 700-800 billion, or actually some say $1 trillion, they're wanting and expecting to happen after the elections. So we really, for the bears, if you're already short, then and you're still short, then you want it to just beat by handily and just go ahead and roll over and start selling off. But if you're not short and you want to get short again, or if you sold today, then you want it to just simply meet the expectations, the estimates, or barely beat, maybe, to where it's not viewed too negatively, where there's still hope that there's going to be some quantitative easing, so that the market will continue on its merry way, roll back up here on the 60, get overbought, and roll over about around midday sometime. That's the ideal scenario here for the 60-minute chart. And if we look at the 30, it's going to be basically the same thing. We are down here, we are going to roll up. We should theoretically roll up and then roll back over. Again, the same thing happened here as yesterday. I thought that we were going to roll up right here at this point and put in that lower tower today and roll over, but it got delayed because there was a lack of stimulus money. I simply forgot about that. I should have realized that and checked on that. But that just goes to show you how important this POMO money is, that there are no buyers. That at this point you had positive divergence going on this 30-minute chart. If you connected here to here and drew a line, we should have went up in the morning and then rolled over into the close under a normal market situation with normal buyers and normal sellers. But there are no buyers. The only buyers left are the government, which is the POMO money. So since there was no buyers, it failed and went back down again, which is so you're looking at it here. It looked like it was starting to move up, went sideways to down a little bit, and then put in a bull flag and was starting to continue up, and you thought maybe it was going to continue up, but it didn't. It rolled over because of lack of that POMO money. Well, everybody seems to be getting used to the POMO money now, and so they rallied in front of it, it seems, as after it sold off, they come in there and bought it. This was kind of a double bottom, as you can see here. Also, if you connect this trend line on up, it looks like it's riding that trend line, so it had quite a bit of support there. The volume was also light at this period of the day, so you kind of knew that the selling was going to end around this time period. So you had the support, you had horizontal support, you got the trend line support, you had light volume. That was all indications that we were going to go ahead and rally up. And then plus, of course, the charts were pointing up at the same time. So you get the 30-minute and you get the 60-minute pointing up. Over here on the 15-minute, you had the same thing. Here, yesterday, I really didn't know what to make of these small towers here. They really didn't give me any indications. I had to go off the 60 and the 30. And so basically at that point, as I explained on the 60 and 30, basically we sold off in the morning. And when we finally hit the bottom, it started to rally back up and work its way back up. So now it is overbought here on this histogram tower, but look where we are here on the MACD. The MACD is just now coming up, and I do expect it to kind of, as it works its way up, maybe roll down here, and then roll back up and put in a lower tower as it works its way down. So I don't expect this to just roll back down and go and put in another negative tower like this, because the 60 and 30-minute charts are more powerful and they're supporting it. They are pushing it up. So it should just kind of roll down, roll back up, and then maybe get overbought like this, like these moves here, before it finally dies later in the day, by midday or something, and then works its way down. So, here on the stochastics, of course, it's overbought, but it'll stay that way until the 60 and the 30 are finished with their up move. Basically, the 60 and the 30 are going to keep this 15 up here before it finally rolls over into the close or the last half of the day. 5-minute chart's going to be the same thing. The 5-minute chart's going to work its way down, and by midday tomorrow, after the POMO money is spent and the charts seem to be overbought, it should get ready to roll over as well. Now, how high can it go? Well, that's a good question. As you can see at the end of the day, if you draw a line right here, this line was broken at the end of the day, and then it came back and touched it kind of. So I think they've broken out of the overhead resistance. If not, then all they need is a little bit of a gap up tomorrow. And the way that they would, of course, accomplish that is if the continuing claims and initial claims numbers are just basically meeting expectations or barely above. In other words, again, we don't want them to just beat tremendously right off the bat, because that would cause the market to sell off quickly. And with it already being sold off and working its way back up, that's really going to kind of limit the downside. So we really, as bears, we do want it to run back up and get overbought and then roll over into the close on and continue that on Friday's GDP number. So we've also got the mutual fund companies that want to end the quarter out October 31st, and they will probably be selling tomorrow as well as Friday to close out the quarter. So there's that, and a little bit of fear in front of the election, not knowing what's going on, and the FOMC meeting on Wednesday of next week after the election. So there's a lot going on there. So they're going to try to take some profits. But that doesn't mean that I don't expect it to run back up some tomorrow. So you know, it's possible that in the morning we could, you know, go down in the morning and then run back up. That's a possibility too. So it's really just going to depend upon them initial claims numbers. I do expect them to beat. I don't expect them to beat by a lot. If they really beat by a lot, that's going to be very bearish on the market, and this thing will roll over right off the bat. But I really am leaning towards it going up in at least, you know, hitting this level here, this multiple top right here, and maybe even pushing a little higher. Maybe it pushes on up here to this top. It's, you know, 1190 area. It's possible. It's hard to say, but I do expect it to run back up a little bit before it rolls back over. So it's going to be a time thing. It's a time and price thing. So you're kind of looking for this level to be hit, this 1185. Next up would be 1190, but you're also looking for the time, and you're looking for this to get overbought on the 30. And same thing with the 60. You're looking for the 60 to get up here and get overbought a little bit and get ready to roll over. So you're going to kind of look for this line right here. If you draw on a line here, you'll kind of look for it to hit that line and have trouble, and as well as be in positive territory and look to roll over. You want to match this all up with the 30 minute at the same time, and with the 5 minute, and with the 15 minute. You're going to match them all up. You can throw the 10 minute in there too, the 2 hour and the 4 hour, but I don't have a chart of those. But you can throw them all in there as well. So you match them all up there, and it's going to get you your best entry point. As you can see here on Cobra's chart, the SPY is rolling down. Still got more room to go down here and get over sold, and it's nowhere near it yet on the daily. So, but that doesn't mean it can't, you know, pop back up in the morning and then roll back over and pop down. As you can see from this chart, by Friday, a good closing area could be around this. If it does sell off indeed, then a good closing area could be around this 116 area. If it manages to drop that much, somewhere around that area. You can see there's lots of support here in this area. I don't expect it to sell off a ton in front of the elections, but I do expect it to sell off some profit taking. And you know, maybe then they'll rally it back on Monday in anticipation of the election and stuff like that. So, and then here on the VIX, as you can see, same thing. We should kind of go down here probably tomorrow and maybe fill that little gap in the morning session, maybe even fill that one, and then probably reverse back some. I think the VIX is getting ready for a breakout, but it could drop back a little bit first. And that also on the dollar chart, the dollar, as you can see, is continuing on up. So while they might try to sell it off some in the morning, it's liable to keep on rallying. We're getting ready for a C wave here, so you know, especially coming into next week. So we have to see. We have to take that one day at a time. But anyway, for tomorrow's call, it's looking like up a little bit. Don't know how much. It's a time thing again. The predicted area is here and then here. So that's 1185 to 1190 area. And then a time-based thing based upon when the POMO money ends around 11:30 noon, something like that, for this chart to finally roll back over into the close. And that's it, gang. Good luck, everyone. See ya.